because even though I discovered fractals, I still struggled with coming up a plan. So that's why I started coming up with a plan and quantified probability. So my personal solution and what started working for me was I came up with the 4 time frame system. Each time frame gave me 25% confidence. And when I had multiple alignments for the time frames, that means the setup was really good. So as you can see, a 4 out of 4 time frame was an A plus setup. 3 out of 4 was B. 2 out of 4 was C, and 1 out of 4 was F. Obviously, the percentages aren't matching, but you guys know what I mean. So by doing this, it gave me pretty much a playbook. Let me ask you guys something. Would you guys enter on a 2 out of 4 or out of 1 out of 4 probability setup? No. So that's why I started noticing exponential gains once I started entering on 3 out of 4 or 4 out of 4 setups. So I want you guys to answer these questions. And if anybody wants to answer these, please feel free to raise your hand and come up on the stage yourself. So I want to ask you guys something. How do you personally quantify probability and avoid confirmation bias? How many time frames do you guys personally use? Do you guys check spread monster for confluence? Do you guys use the vector? What's your personal checklist system? Does anybody want to answer that question? Or come up on the stage, feel free to raise your hand. But me personally, ever since coming up with that with this 4 time frame system, I have updated it to 6 time frames. I started using the spread monster. I started using the IV walls, of course. And I'm pretty sure there's 2 components I'm missing, but overall it's changed a lot since the days of the 4 time frame system. Uh, would anybody like to share their personal confluences?
Will is saying that he still struggles trying to systematically base strat on probabilities.
Oh, Will, question for you. Which time frames do you personally stick to? Oh, welcome in VIP. Appreciate you talking.
So, what as far as timeframes and what do I do for my system? Am I understanding the question? I'm a little late. That's what you're asking.
Absolutely. Yeah, so the reason why I brought this up is because I said before I wasn't basing my entries off of a good system. So that's why I made the 4 time frame system. So once I started entering trades that had 3 out of 4 or more uh, aligned setups, that's when I started being more
All right.
profitable. So
I
I'm asking, like for you personally,
Yep.
what do
I
you
just I just
use?
wanted to understand it so I stay on point because I'm known to go off point. Here's the thing. Me personally, every system works as long as you back test it, right? Whether you're using this, that, or the next thing, if you back tested 400 instances and you have the right R&R, those two things have to happen, then it works, right? So for me personally, I like to sell spreads. To sell spreads every morning, I first look at Nook's charts, right? Because he's given you a cheat sheet. And for me, specifically for selling spreads, I'm converting the extreme moves where we're at the top of the red box and really good points where I think, okay, if we get here, I should see some sort of resistance. I should see some sort of pullback because probability tells us that we have a good chance, right? Because he's been good enough to mark off your different open states, your different splice levels, which give you data, right? It's data driven. It's probability driven, and I know where those levels come from. on his charts. They're based on data, right? So that's my first set, right? Then I go in and I look at the 7 daily and I look to see, hey, are we above the vector? Are we below the vector? What's our different targets on the top side, different targets on the bottom side? I'll use the 7 daily. I'll use the 760. This is how I do my homework. And then as it opens up, I look at premium because premium also tells a story, right? That means market makers are not comfortable. They need that premium is their safety, basically, right? So some days you notice you'll buy the same contract $2 away on QQQ, and one day it's 50 cents, and another day it's 85 cents, right? That just tells you on that day the market a little bit more anxious. So I'll look at premium levels as a confluence. For example, this morning we saw that it dumped, and I was hanging out with Yoza when it was dumping, and I was itchy. I was just itchy to sell, but because I had my levels, because I had my system, um, and I stuck to it, right? I used the levels on Milk's charts and it said, okay, wow, we didn't respect this level. We didn't respect that level. You waited, right? You waited. I first looked to sell premium when we hit that first RTH gap. And I'm like, oh my God, it checked it back, but it didn't respect it. So if you get a system where you say, okay, 7 daily, I'm going to respect those numbers. 760, I'm going to respect those numbers. If Russell comes out and gives you levels and you say you're going to respect those levels, you got to have a system. But for me, specifically for premium selling, I'm looking for that outlier push. And I'm getting these levels from Milk's charts, from OMMs, and from the fractals, two specific charts, and it worked out beautifully today. I started out early and I stacked down, and then we got this beautiful reversal, and everything just went ting, 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 ting. But for me, those are my levels specifically for selling spreads. Because if you're here, you know I always post. I sell spreads. I'm waiting for a floor hit or an OMM hit in confluence with other levels. I hope that helps explain what I do for multiple time frames and what I do to trade a specific.
No, absolutely. That was very insightful and helpful. And actually, now that you mentioned that, if you're interested or open to it, I'm pretty sure everybody in RCG would appreciate it if you would make a video and showing your style of trading spreads because
Oh,
we currently don't do that. But
we
it's up to you,
tried
like
that.
if you're personally fine.
We try. Everybody knows people DM me. I'm more than happy to
Yeah.
answer any questions. People DM me all the time and I answer them. And I post what it is. But really, really quickly, uh, selling premium is doing exactly the opposite of what Russell does, which is scary, right? But if you are systematic about it and you back test it, it works. So if you guys want to sell premium, I call this the milk sale. Okay. That's what I call it. I had to explain it to Yoza one day. I said, play the milk sale. What is the milk sale? He's good enough to draw. If you see a stable floor, not one that's dropping, and not one in the last 30 minutes until you gain more experience. But if you see a stable floor and a stable ceiling and you press into it, if you're inside he puts it always as a 10 point spread. Okay. If you press inside of that, you're going to get anywhere between $2 and $2.60 in premium. I don't care where you are on the chart, it's always going to be the same. Okay. I don't care if you're at noon. I don't care if you're at 3:30. If you're within those 10 points, okay, you're going to get on a 5 wide $2 to $2.60. Okay. Now, if you want to say, well, does it work? What's my risk? Well, your risk is $5 minus whatever premium you get. So if you're getting $2, you're basically betting 2 for 3 on a high probability trade. Well, what's your probabilities? Well, I tell you high. You want to know specifically? He's good enough to put all his charts up every day, download 30 days worth of charts, and just count. We hit it. Did it go below? And I'll tell you right now, if you get 10 points outside of the box, okay, you can assume that you went from $2 to about $1.20. If you get 15 points out, you're going to be underneath $1, right? This is early on in the day. After 2:30, it gets a little bit more aggressive, you know. And remember, you just need to be a penny underneath to collect all that premium, right? So, you know, I would start off with the milk sale premium selling because it's got a good R&R, right? For $2, if you lose, you only need 2 wins to recover. When I play a lot of my spreads, I'm going way out because I don't want you to come near me. It's to 90 cents. I'm selling in that range, right? So I'm $20, $30 away after a good move. So for example, when we hit 6,900 area this morning, I was selling 68.30 / 25 for 60 cents. Okay, we just dropped 120 points, and then you're telling me the low on SPX, I think was I'll tell you now, I think we go down to 69.10, if I'm not mistaken. So from 69.10, you got to drop another 80 points to come take me out. I'll take that every day of the week. I was distracted today. I should have loaded the boat on that one, right? I also sold 68.70s, which were only 40 away, right? Which, you know, if things utterly went wrong, I might have had to play defense on. But if you can sell 90, $80 away after a 120 point drop, and then you start to see a reversal, that's free money. And I took it. And I took it, and I didn't get greedy. I got out at my 20, 25 cents area because that's my rules, right? So I use
The
Milk's
Mediterranean
charts,
diet is
and
the
I
world's
look at
healthiest
the
diet.
writing that he does. High probability for a cap session. Yeah, that when we get there, that's when I'm trying to figure out whether I want to sell or not beforehand. I have everything lined up. I know that if it gets there, what SPX contracts I need to sell, right? And I know that nothing is worth it unless I'm getting 60 cents, and not 60 cents when I'm right next to it. 60 cents when I've got distance, 20. When you get to like 2 o'clock, you can't expect that much distance. You have to go maybe $15 away to get 60 cents, right? Screen time is the most important thing. As you watch the screen and you write down your probabilities, okay, and your levels, right, and you stick to them and you test it live, right, and you're honest with yourself, you'll find that you're going to increase your level of success. I'll give you an example. I had levels this morning, right? These were my levels, okay? I looked at, in fact, Yoser helped me because I was locked out of fractals this morning. So she sent me the charts, right? I knew that the vector was 70-20 on ES, right? And then I knew that we can go all the way to 6881. There was a number all the way on the bottom of that 760 chart that says that's the last line of defense. Well, where did we get? On the low was 6898. How freaking good is Fractal that he gave me a level before the market, when the market was 7,026, to say, hey, if we get down here, pay attention. Okay. And we had levels on top of that we blew through, just right through it. And you're going to learn as you watch these things. And I use these levels to say, okay, you get here, what's the premium? What's my risk? How close am I going to get to this? Because I know that if I'm $10 away, my premium is going to be this much. And if I touch the edge of my contracts, right? So hypothetically, if I sold 68, 70, 65s, when you get to 68, 70, that contract's going to be worth $2. If I sold it for 50 cents, if I sold it for $1.50, doesn't matter. It's going to be $2. So once you start to understand the pricing and then you understand the levels, you're going to be able to see where the price is going to be when the price gets to such and such level, right? And that helps you sell premium. That helps you throw in the towel when you need to throw in the towel. Because you can look at Milk's chart and just Milk's charts alone, as long as you know the differential. Today was $30, $29.50 between ES and SPX, right? As long as you know the differential, you know what your premiums are, and it becomes I'm at like a 98.5% win rate. And that's not impressive. That's what it be for you to make an extraordinary good amount of money in selling premium unless you're doing the milk sale. On the milk sale, if you're at 65% win rate, you're going to kill it. You're going to kill it because you're collecting $2, and then the 1 or 2 losses you make, you're not going to sweat it. You're not going to sweat it, you know? On a back study just on his milk sales, and specifically, and this is how I'm trying to come up with a system for it. I want to know he has 7 different floors and ceilings. Based on the pattern of that, based on OMM, based on the location, and not trading the last 30-minute or the last hour, uh, um, ceiling or floor, right? What gives me a statistical edge to double down on certain plays and lighten up on other plays to better R&R leverage on the wins versus the minuses, right? So I'm using some data that I'm coming off of his charts. I'm using AI to analyze the data, and then I'm adding some notions, some observations, right? So, for example, one of the things that I note is the location of the ceiling or the floor. If we're in the red box, right, it should have a different result than if you're in, for example, the green box, right? If we're in a trend day, you should have a different reaction than if you're in a balanced trade. So, in developing this system, I'm taking data, right, Milk's levels, right, and they're subjective because he's drawing these out subject to what he sees, right? My conversions are often very different than his because I'm doing it in SPX and he's doing it in SPY and converting it to ES. So we go off by a few numbers. But when you create a system, you have to stick by the data that you're observing. So in this case, I have to stick by his numbers, even though I feel that my SPX numbers might alter maybe a point or two this way or that way. And sometimes that's all the difference between a win and loss when it comes close. But I'm going on and on. I hope this helps in showing you how you could set up a system and maybe answers a few questions and creates a few questions about spread selling. And you can feel free to DM me at any time. When I get to it, I'll absolutely answer them. Nothing's off limits when it comes to that.
VAP.
It's
That was
AVP.
really.
It's AVP. It's just my second account.
Oh, okay. I was confused for a bit.
I
Man, I
don't know.
really.
It's just my second.
I'm gonna. You're gonna be seeing me in your DMs to ask you some questions soon
Anytime,
because
anytime.
I really appreciate you coming there.
I think I explained it to Yoza this morning. I said selling premium is like playing tag, right? Um, you want to be, when you're a kid and you're playing tag, you can be dangerous about it, right? You can let the guy come all the way up to you and then run at the last second. Sometimes you get surprised that kid catches you when you thought they'd never catch you. down the block, come and get me. That's what premium selling is, right? The risk is how close you let that person come to you, okay, before you run away. That's the simplest way of explaining it. Selling spreads.
That's a good way to put it. Appreciate you, AVP. B-Day, did you have something to say?
Yeah, I just have a question for VAP. I was just gonna ask, like, with selling premium or anything in general, what do you have advice for a futures trader? Like, what could help, just whatnot? Since I am a futures trader, I do not
Okay.
sell premium.
So,
So, what would like help in your eyes for that?
Ask a better question. Are you asking about trading ES? Are you asking about trading options? Are you asking about trading selling spreads? Pick one.
Selling spreads.
Okay. So have you ever sold spreads before?
No.
Okay. So first understand risk. Whenever you take on a new strategy, forget about how much money you can make. This game is not about how much money you can make. This game is about, this is what my mentor said to me. Okay. One time I came to him and on ES, I was trading like a nut, like a nutter. Okay. I'm talking about 100 contracts a day with, 2 to 10 contracts at a time, scalping left and right, this and that. And I go to him and I go, oh, look at me, 85% win rate. And he immediately said to me, I made more money than you, and I have a 65% win rate, 63% win rate. And I'll tell you right now, you don't honor your stops. Go back and look. And he was dead on, to the money. I didn't honor my stops. I was bullying myself out of positions, and I was nickel and diming it. And I could have lost more trades, but made more money. So when I tell you, when you come up with a system, look at what is your R&R, okay, and what is your consistency in executing a plan. There's two things about a plan that you need to know just as a general trader, okay? Can you come up with a plan that works? That's the first step. And then can you execute the plan? That's the second step. I'm extremely good at the first step. In fact, I have a witness today that showed me call out the entire reversal, point to point to point to point, okay, down to the single print hit and reversal, and to where it was going to reverse to. Okay, if she wants to, she'll vouch for me. If not, it's what it is. But I couldn't execute. I couldn't execute to that level, right? So there's always two parts to every system. You need to get the first part right. Can you come up with a good plan? So whether you're trading your ES, whether you're trading options, or whether you're selling premium, can you come up with a good, sustainable plan every day, right? It doesn't have to work every day, but it's a good plan. There is logic to it. It makes sense. You're not pulling shit out of your ass. There's a system to it. It's repeatable. Does that make sense? Right? Then you focus on executing your plan, right? So if you want to sell spreads, first you have to understand what's your risk. Well, my risk per contract is the width, and I chose on SPX $5 because backstudying says it's the most profitable for me. I used to sell 20 wide. I used to sell 5 wide is a sweet spot. So at any given time, if I get blown, so you'll always hear me talk about a spread as the short side, the side that I sold, and then the long side, which is the side that I bought to protect myself. So in this example, when I sold a put spread of 68.70, 65, I sold the 68.70 and then I bought the 65 as protection, right? That's a spread. So the width of that spread, that is my exposure. but I get paid for giving exposure, right? And in this live example on 68, 70, 65, I got paid 65 cents. So that means if everything went to shit and the price closed below 65, 68, 65 this morning, I would have lost $435 per contract. Am I okay with that? The answer is really no. But can I sustain that loss? If you can't, if you're twitching, then don't do it. Don't do it, right? Wait. Wait for a better opportunity because emotions factor in execution, right? So we talk about the first part, which is your plan, and we talk the second part, which is your execution. Emotions will fuck with your execution. Okay? You could have a brilliant plan. I saw I'm on. Thank you. Yeah. DM me if you have any more questions
Yes,
about
will do.
that.
Thank you.
Appreciate you, AVP.
Moki, shut me up when you want.
No,
Don't worry
that
about
was
it, brother.
awesome.
I'm here to enjoy.
Actually, I'm gonna DM you after, and we're gonna set up another town hall with you because I want to hear more from you because that was very insightful. But I'm just gonna address two questions that I see here in the chat from Will and Sean. So Will is asking, I'm personally struggling to systematically strat on probabilities. It seems like you're using the daily and the 60 wave, correct? So pretty much what I want to ask you is, are those your only two time frames, or do you have more than that? And to Sean, what I have to say to you is how many time frames are you using as well? And when it comes to the fractal system and understanding new components on it, you kind of have to treat it like, I would say, like a lab project. Have you guys, I'm pretty sure you guys have heard of the scientific method. So when it comes to a lab project or a science project, what you do is you ask a question, you do background research on it, you construct a hypothesis, and then you test it with an experiment. Did your hypothesis come to fruition or did it not? And then if it did, keep on testing it. And if it didn't, you go back. When it comes to, like I said, understanding new components on the fractal system, you pretty much have to treat it like a lab project and continually it to see what works and what doesn't work. And um, I know, right? What is VAP? I have novice, but yeah, Sean, that's all I have for you. How many time frames do you have, or do you use personally? I'll get to the next slide. So now we're gonna get into the book itself. So chapter 1, life is poker, not chess. The core insight is most decisions are made under conditions of uncertainty, yet we judge them based on outcomes rather than the process. So in the book, she talks about how chess, you have perfect information and skill determines outcome because you're able to choose your own decisions. There are a certain amount of move lists you can pick from, certain amount of openings you could choose from, and there's no luck when it comes to that. However, when it comes to poker, there's hidden information, skill is involved, and there's also a certain aspect of luck when it comes to it. So going back to one of the first examples she used, which is Pete Carroll's Super Bowl call. If you guys don't know, this is the play.
Play clock at 5. Pass is intercepted at the goal line by Malcolm Butler. Unreal. who almost made the phenomenal play that wound up in Percy's arms. There are flags on the field for a celebration. Amazing.
So as you guys could see there, one moment, please. As you guys could see there, they were on their 1 unit with 26 seconds left. Carroll calls up for a pass instead of running it with Marshall Lynch. And a lot of people were really critiquing Pete Carroll's call when in fact they didn't judge the process. And that's what you call resulting. Resulting is pretty much judging the outcome and not the thought process on the decision. And it was a very sound decision because if he got the touchdown, it pretty much would have been a wrap. It would have been game over. If it was an incomplete pass, he would have been able to get 2 more plays. But unfortunately, the outcome was not what he wanted, and it ended up being an interception. And the stat of that season was out of 66 passes. Sorry, what was that? Oh, I thought I heard somebody. Out of 66 passes thrown from that distance, none of them had been intercepted. A 2% interception rate in the past 15 seasons. The data supported the call. So from this area, there was only, out of 66 plays taken within these distances, none of them were intercepted. And throughout the past, what was it, 14 seasons, I think I mentioned, only 2% of them were intercepted. So it was a sound decision, but unfortunately, people, like I said, talk about resulting, so they only associated the outcome rather than the decision-making process. So yes, correct. So exactly. And that's why that analyst supported his decision, because it said it was a sound outcome. He looked at the data himself and he pretty much said, yeah, it was a good choice. But to people who just watch on TV and don't really analyze the sport itself, they just thought it was a bad outcome. However, if it would have been successful, just like she says in the book, he would have been the greatest coach of all time. The fans would have loved him, revered him, but unfortunately, that wasn't the outcome. And next, it brings me to resulting. Resulting is something we pretty sure everybody has gone through this. It's a tendency to equate the quality of a decision with the quality of its outcome. So let's say we make a good decision plus a bad outcome. We incorrectly assume the decision was wrong even though the process was sound. A bad decision plus a good outcome. We incorrectly assume the decision was right, ignoring luck's role. This bad decision plus good outcome was exactly what I experienced when I was barely starting out as a trader, as I said in the previous slides. In trading, one profitable trade doesn't validate the strategy, one loss doesn't invalidate it. So the fix is to focus on the decision quality, not the outcomes. Judge over many iterations. So it's very important to, pretty much like I was telling you, Sean, collect data, treat every trade as a lab experiment. Have the hypothesis ready, and then once you have the outcome, add that to your data, see what works, see what doesn't work for you. So I have another question for you guys. I want you guys to think about a recent trade. Describe a profitable trade where you broke your own rules. Did you celebrate it or recognize a flawed process? Describe a losing trade where you followed your strategy perfectly. And how did the outcome influence your perception of the decision quality? So for me personally, I occasionally catch myself, let's say I'm out and about in a store, I pull out my phone and I'm just itching to look at the charts and take a trade. I broke my own rules one time by looking at the 10-way 15-minute. It looked pretty good. I ended up taking the trade and it ended up working out in my favor. However, I broke my rule of my four chart system, as I was saying before. So it's things like that that will really bring down your process of decision making, if that makes sense. Does anybody else have an example? Or something they want to talk about? I'll just move on to the next slide. So quick or dead, two. I'll go to slide 12.
I think he's having trouble
I
with his
see.
mic.
So heading into chapter 2, want to bet. So chapter 2 introduces the betting mindset. When we think of pretty much our beliefs as bets, something shifts within us. We become more willing to, I would say, examine the evidence. We update our views and we acknowledge uncertainty. So in the book, this chapter, Duke tells a story about a guy who spent 30 days in, I forgot what city it was, but he pretty much says that he hated it. He was bored out of his mind. So he formed his belief that that city was a terrible place until somebody told him that I love this city. It's a great city. And then he got defensive. He cherry picked his memories to defend his position. He only experienced a tiny part of the city. He was there for work, not exploring. So obviously, if you're associating a place with something bad, something that you don't like to do, like work, you're obviously not gonna enjoy it. However, if you're there for vacation, if you're out exploring, looking at tourist spots, you're obviously going to think different of it. And I would say we're all, uh, was it this one? I don't know how to pronounce it. But pretty much we're all guilty of this. We all cherry pick characteristics of something that we don't like, so it could agree to our bias. We form beliefs based off of limited information, and then we pretty much end up defending it, defense like our lives depend on it. So if we look at these two statements, as you can see here, it says before, I'm sure the market will rally, and then after, I believe 5% chance the market rallies based on. So what do you think will happen if you say, I'm sure the market will rally, and it doesn't? It does the complete opposite. You're obviously not going to feel very good because your bias is going to be wrong, and that ends up hurting your psychological aspect a lot more compared to, I believe there's a 65% chance the market rallies based on. What if it does end up rallying and there's a 65% chance? You put probability on it, so if it does end up failing, it's fine. So chapter 2 also covers two huge biases we have when it comes to trading. So first of the two is called self-serving bias. We credit good outcomes to our skill and bad outcomes to, I would say, luck or external factors. So somebody could say, I made money because I'm skilled, but I lost because the market was irrational. I'm pretty sure you guys have heard people say the market is out to get me, or the market makers came for my stop, when as a matter of fact, as I'm sure the market makers don't really care about any of us because we're ants in the whole we're pretty much ants. We don't matter. We're small fry. And pretty much Duke says that the way we field our outcomes is pretty much patterned. We take credit for the good stuff and blame the bad stuff on luck. The result is we don't learn from experience. And the second thing is confirmation bias. So what happens with confirmation bias is we seek information that confirms our beliefs and discount information that only challenges them. There's also another famous psychology study that Duke references that's called They Saw the Game, which is when two groups of students watched the same football game. There was the Princeton students that saw the opposing team commit twice as many infractions as their own team, and the Dartmouth students saw Princeton commit more. Same game, completely different interpretations based off of which team they supported. So pretty much what happened in this study is simple. When you frame your beliefs as bets with real stakes, you engage with accuracy and motivated reasoning instead of self-serving narratives. So Duke says that when somebody challenges you to bet on a belief, it triggers you to vet the belief, to take inventory of the evidence that makes you informed. It makes you examine your information in a less biased way, to be more honest and forthcoming about the information that's being presented. So ask yourself, would I bet $100 on this belief, or it would be better to ask, what odds would I need to take this bet? Anybody have any questions? Next slide. So once lodged, hard to dislodge. And it's pretty much saying old habits die hard. As you can see here, it says the stubbornness of beliefs. Once a belief forms, we don't update our beliefs to fit new information. Instead, we alter our interpretation of new information to fit our existing beliefs. So step 1, form a belief. Tech stocks always go up. Step 2, new info. Tech drops 20%. And step 3, distort info. Just a correction, by the dip. So as you can see, what happened in this 3-step process is that you had your certain, as Duke said in the first example, there was an interception, which in this case, the interception was that the tech sector dropped 20%. And in step 3, it was pretty much trying to justify the incorrect behavior of buying into your losses. So why do beliefs stick? Changing beliefs requires admitting that we were wrong, and not a lot of us like to admit that. Our identity becomes tied to our beliefs. It takes mental energy to update. The internet effect. We seek sources that confirm our views. Algorithms show us what we already agree with. Echo chambers reinforce beliefs. So I want to ask you guys something. I'm pretty sure we're all guilty of the internet effect, whether it be movies, video games, stocks you're in. You're obviously going to be ignoring the negative opinions regarding what you're biased towards and ignore the negative opinions on it. So in trading, the stubborn thesis is you believe a stock is going to go $100, it drops $70. Instead of reconsidering, you find reasons why you're so right. Market is irrational, shorts manipulating, just needs time. The belief stays lodged despite contradicting evidence. So that's very dangerous to have this kind of mentality because I know because I personally struggle with that. I would always have this kind of mentality. So when it came to an options play, let's say for example, this was me. I I ended up losing 30% on it. I ended up averaging down on it. I try to find reasons why I was still right or reasons why the play would still work. And despite everything, all the contradicting evidence, it's why it's very dangerous to have this kind of mentality. So, chapter 3, Bet to Learn, redefining wrong. Does anybody have any questions so far? Am I going too fast?
Yeah, you're doing
Job.
awesome, okay.
This is really for the for for the people who haven't read the book. This is like the book in summary. It's awesome. Thank you.
So, anybody have any questions?
Also, just real quick, what Milk was saying, if you want to get the book, you can stream it on an audiobook too if you can't sit down with an actual page turner. I listened to it in the car. I had a lot of driving to do for a couple of weeks and I had to rewind a few times, but yeah, it's a really good audiobook too.
You can DM me afterwards, and I'll get. If you can't find it or you just can't get it, I'll give you a e-copy of it. Just be patient, but you can DM me, and I'll give you the book.
All right,
Oh,
so
don't DM VAP. DM VP in RCG.
all right, so gonna read this comment by RCK Trades. Let me go back a few slides. So by so pretty much what RCK is asking is how do you implement this change? What steps should one follow? Is it mentioned well in the book? It pretty much is, but what I personally did was I made the system as you could see here. As I said previously, I had 4 time frames. I only took time frames or 4 out of the 4 time frames when it came to trading. So 3 out of the 4 time frames were in agreement and had a strong alignment. I would take that trade. If all 4 of them looked pretty good, I would also take that trade. However, when it comes to coin flip territory, I would stay away from it. And when it came to 1 out of 4th, uh, I would also stay away from that. So, question for you, RCK: do you have a system, or do you have certain time frames you stick to, or do you switch it up? And I'll let you type it out in chat. Which slide was I on? Bet to learn. Oh, so chapter 3, bet to learn. Pretty much what chapter 3 is about is redefining what it means to be wrong. Being wrong isn't being a failure. It's the opportunity to discover what's right. And the goal isn't to be right, it's to continually update your beliefs towards accuracy, which is pretty much what we do in RCG every single day. And Duke opens up chapter 3 with a story about playing poker in a place called Crystal Lounge in Billings, Montana. She calls it her lab for studying how people learn and how people make decisions. Every hand takes about 2 minutes. In that time, you're making up to 20 decisions. Each hand ends with immediate feedback. You win money or you lose money. So in that instance, it's kind of hard to kind of come up with the hypothesis because everything's moving up so fast. So how are you gonna end up tracking the quality of your decisions if something's happening so fast? You know what I mean? As you said previously, each hand takes about 2 minutes. So in that time, you're gonna have to make a decision whether to lose money or to make money. So when when the experience is that noisy, how do you pretty much collect data? And she says to fix that, there's a big difference in getting experience and becoming an expert. The difference lies in the ability to identify when outcomes have something to teach us and what that lesson might be. So there are 3 principles here: accuracy over ego, seek truth, not validation, update beliefs quickly when new evidence emerges, and learn from every loss. Every outcome is data. For trading, this means your journal should track not just wins and losses, but how well you stuck to your process and what new information emerged that might change your thesis. Obviously, I'm pretty sure if you guys have tracked your own trading, you're going to see patterns within your own decision making. You're obviously going to see a lot more losses when you don't stick to your plan, and a lot more wins when you do stick to your plans. Or, like for me personally, when I stick to my 4 time frame system. I want to provide a quick incentive. The first person who comes up here and talks about their own personal system, I'll buy the book for them on Amazon. So who wants to raise their hand? All you got to do is just talk about your personal system and that's it. Does it work for you? What you track? How do you track probability? If anybody wants to come up here and talk about it, I'll buy you. You guys don't have to be shy. I don't bite.
I can speak to this chapter a little bit. Um,
I'll buy
no,
you
you
the
don't
book
have to
then,
buy me
user.
the book. I read the
Congratulations.
book twice. So I hate being wrong. In my previous work, my whole life, I'm not allowed to be wrong. So, you think nobody bats 1,000. Everybody tries to, but you're not going to bat 1,000. Even the best baseball player, home run record keeper, is not striking out once in a while. You're going to be wrong. So this book actually helped me be more okay with it, because with trading, I'm wrong a lot. Like today. No, I'm just kidding. but it's just hard. It's a really hard paradigm in your thinking, in your mental state, to shift it to be okay with being wrong, because we're just taught, do your best, and You need to be good at things, and if you mess up, keep trying, keep trying. But one of the things I can equate it to immediately is, in a lighter note, is I surf. So you catch a bunch of waves, you fall a lot. If you're not falling, you're not learning, but you're hitting water, and unless you break your board, it doesn't cost you any money. So when we have our belief systems about money and our relationship with things that are of value to us, we don't want to be wrong. We don't want that risk on the table at all. And it's odd that so many of us are attracted, but we don't like to be wrong. So I just think that it was really good, to find some balance by seeing all these different perspectives of nobody wins every hand of poker. Nobody, the best team doesn't win every football game, except for the 1972 Dolphins. But that was for my dad, by the way. But yeah, you know what I mean? Like, it's not even about I'm not sure. It's like you're just scared of being wrong. So that was my takeaway from
Yeah,
this part of the book.
exactly. Yeah, it's really important to get into that mindset because, fractals is really such a revolutionary and beautiful thing because what other strategy can you place a number on and give it probability to? I don't think that's ever existed before. So fractals gives us a huge edge by giving us the chance to put a label on a trade and give it a percentage, a probability. And I don't think that's ever happened before. So all you have to do is just organize yourself, come up with a system, and it would be extremely hard for you to fail once you have your proper time frames in place. You know, all the tools set aside here. So yeah, just don't take fractals for granted. Please, if you're struggling, just organize yourself with certain amount of time frames. Those time frames that Sean sent in the chat are actually really great, and some of them I still use to this day. Actually, I use all of them to this day. So those are really excellent time frames, and you could use the four system time frame with those charts that Sean sent there. But yeah,
Oh, just one more thing about that. So now that I have to be wrong all the time, there's comfort in what you just said because with the fractals, my stress level has come down immensely because I can measure it. I'm just not going to be infinitely wrong and screw up everything forever. It's measurable. It's the probabilities are there, and I'm okay with I have a more high probability of success over time with odds and statistics, but also just looking at the market the way I was looking at it before, I feel like that's just been leveled out and now it's measurable. We have all this data, and there's power in having the knowledge of that. There's power to make a better decision, to make a better trade, to not lose your cool, all of that. So for me, the data has been the biggest part of fixing that that mindset that I had before.
absolutely.
That's all to add what you said.
Thank you. Sean, you got something to say? Appreciate you coming up here. If you're speaking, Sean, I don't think we could hear you.
Hello?
Hey there, how's it
You hear me
going?
now?
Yeah, how's it going, boss?
Good. Good, good, good. No, user just she texted me privately that chart that Russell posted is supposed to be the wave 25 minute, not the wave 5 20 minutes. So just making sure that people realize that. But yeah, that's what I just want to make sure.
Okay, sounds good. Appreciate that.
Just for
Anything
anyone
else you
new.
want to share?
Um, I don't know. I
Come on.
like I've been around this server for a while, but I've been so busy with work that I never really focused on anything. But the only thing I can say though is through my trading is just actually go through and learn a system. I just kind of flowed through the wind and it worked for me. But like Monkey said, it's not a long term success. I also wasn't learning anything, and at the end of the day, money's money, but also improving yourself is more important in my opinion. So just make sure to learn everything every day and listen to these guys.
Appreciate that, Sean. Thank you. So going back to this slide, making peace with I'm not sure. So one of my favorite book quotes from the book is getting comfortable with I'm not sure is a vital step to being a better decision maker. We have to make peace with not knowing. So if we aren't comfortable with saying I'm not so sure, what do you think comes next? I'm sure. You're definitive when it comes to the outcome of something. So when you're definitive on the outcome of something, you're not going to like when the outcome uh, doesn't come to fruition. Just like uh, just like the guy defending the city that he didn't like. We were discouraged from uncertainty. Saying I'm not sure feels vague, unhelpful, even evasive. We feel pressure to be certain before acting. But certainty is an illusion. Hidden information and luck mean we can never be truly certain about future outcomes. So, what makes a decision great? Duke is clear on this. A great decision is not one that has a great outcome, but it actually comes from the good process that accurately represents our state of knowledge, which is always some variation of I'm not sure. So, just like the football example, that was a really good process with a bad outcome, unfortunately. So, instead of saying this setup will definitely work, try I'm 70% confident based on what I know. So, I'm pretty sure you guys see the reoccurring theme pretty consistently already is try to slap as much, or I wouldn't say slap, try to add as much uh, probability to your vocabulary as possible. You don't want to just go in a trade and say this will work or this looks good. By giving a trade probability or a number on it, you're reinforcing the idea that you're pretty much training your brain to take trades on high probability trades. So let's say, for example, you say this trade looks decent. What sounds better? This trade looks decent, or there's a 40% probability of this working out. So obviously, if you say it in probability terms, it doesn't sound good. So you're obviously not going to enter a 40% probability trade, right? So yeah, that's a reoccurring theme. Sorry, what was that? Exactly. Oh, you, oh, yeah, absolutely. I I think it helps also to look at it in both perspectives or both side of the coin. So let's say, for example, you have a trade that's there's a 80% of probability of succeeding. I also look at it on the other side and say I'm percent chance of me failing. So that kind of also helps with my mentality, if that makes sense. So pretty much just looking at it from both ways. So looking at it from the 80% chance of success and the 20% chance there is to lose that trade. It just helps.
Monkey, can I add one small thing?
Absolutely, boss.
Emotions. If you're using emotional words, you're going down the wrong
Exactly.
track. A lot of times I'll have conversations with Milk, and he'll say, say it again, because I'll say something like, I feel. No, if you're going to be a successful trader, there's no room for feelings. There's room for data, there's room for probabilities. So if you start catching yourself saying things with a lot of emotion in it, right? That will be the hint that you're starting to go down the wrong road. Just like you said, Milky, and just like Milk said, when you define your plan, it should be statistical, right? It should be scientific. It shouldn't be touchy feely. And that's it. I'm cutting it off at there.
Yeah, I fully agree with you, AVP. It's especially important because that's what the system revolves around. Probabilities. If we aren't using probabilities when it comes to our vocabulary or entering a trade or collecting information, that we're not using the system how it's supposed to be. We are stuck in the first stage of trading, which is pretty much trading with luck, since we aren't using it how we're supposed to be using it. But welcome in, Russell. You have anything you would like to add? The roast man. I'll start with the Yeah, I fully agree. I like what you said when could you say it again? What you see is what you say is what you think. What you think is what you say, and what you say is what you see. I'm missing one component, right? It was four of them. Yeah. Yeah, so that's another challenge that Milk has for you guys. That's pretty good to take into account. Start by changing the way you perceive things and your vocabulary. 2 weeks is what you said, right? Challenge yourself to change the way you say things for 2 weeks and let us know how that goes. But um, coming back to the slides, so pretty much what the goal in this chapter is, or one of the goals is to cause a big shift in the way we think. We aren't wrong just because things didn't work out in our favor, and we aren't right because things turned out well. When Duke says we think in advance about the chances of alternative outcomes and pretty much make a decision based off of those chances, it doesn't automatically make us wrong when things don't work out. So it pretty much just means that one event in a set of possible futures occurred. Redefining wrong means to have an unwanted result, not make our decision wrong if we thought about the alternatives and probabilities in advance. Redefining right is a good outcome doesn't automatically mean we made a smart decision. Luck might have just bailed us out. So predictions between 0% and 100% can't be wrong. Any prediction that isn't certain can't just be wrong because the most likely outcome didn't happen. It just means that one event in a set of a lot of possibilities occurred. So again, in trading, if you said 75% chance this breaks out and it doesn't, you went wrong. That's 25% scenario playing out. Judge the process, not the single outcome. So how do you? Yeah, exactly. Guys, uh, even though you guys are here, I highly recommend you go out and just purchase the book yourself because we could only go over so much information on here, but the book goes into a lot of detail regarding a lot of the things she talks about. So, how do we form beliefs? So, let's talk about how we form beliefs in the first place. So, Duke quotes a psychologist called Daniel Gilbert who says, our default is to believe that what we hear and read is true, even when information is clearly presented as fake. We still process it as true. So, that's true when it comes to things you see in social media, TikTok, all of this stuff. That's why you guys see people say the word fake news because there's a lot of fake news that's being unfiltered, unchecked, that's being pumped out at crazy rates. So once that that information is lodged inside of you, it's hard to dislodge. So once a belief forms, whether we hear the fake information or the new information to fit our beliefs instead of updating those beliefs to fit the new information, it becomes hard to unlearn. That's why the saying is old habits die hard. And the internet makes it worse. As I was saying before, what I mean, we gravitate towards sources that confirm our beliefs instead of seeking diverse perspectives. The wanna bet test. When challenged to bet money on a belief, we examine our information less biased and are more honest about our confidence and are more open to updating our views. So why is that? Obviously, because there's something at stake. It's not just your personal opinion. So ask yourself, would you bet $1,000 on a trade thesis? If not, why are you risking real money on it? So here's the part that Milk was saying, which is pretty much uh, communicating uncertainty, change the way you speak about things. The language of probabilistic thinking. Expressing confidence as percentages for analysis. So as you can see with this absolute, it says this stock will definitely go up, which is leaves no room for uncertainty. While if you say it with probabilistic vocabulary, you now have a 70% chance and you now have a probability of the trade working out. So as you can see, it's the same thing here. So discussion, learning from being wrong. Reflect on a recent wrong trade. What was your original thesis and confidence level? What information emerged that contradicted your view? How quickly did you update your belief? What prevented faster updating? If you could redo it, at what point should you have exited or adjusted? Does anybody have anything to say about that? So I'll just say a personal example. Oh, AVP, you want to go?
Real short. Uh, you learn more from your losing trades than you do your winning trades, but it's work, and you got to put in that work. You got to ask yourself, and this is the hard part. You have to be honest with yourself, right? You can't sugarcoat it. You can't make excuses. It can't be that you didn't hit the key fast enough or what have you. If you look at your losing trades and you said, this was my thesis, what didn't work out? Notice what I said, not what didn't go wrong. What didn't happen that I thought was going to happen because the data was what I was driven at, right? If you change your vocabulary and you go back and you say, okay, look, here's the 30% chance that it was going to happen and it didn't happen, and you can understand why it didn't happen, and you pick up on that, the next time you'll improve on that situation, right? Um, you'll learn more marking up your losing trades and understanding those than you will on the winning trades. So always journal those losing trades if you can.
Yeah, it's really important to pretty much journal. Otherwise, you're not going to be collecting data. Otherwise, it's going to be like Anna, or not Anna. It's going to be like how she said it when it came to the poker table. You and there's so much noise, it's going to be hard to think about the decisions you made, and it's going to be hard to pick what worked and what didn't work for you. So that's why it's important to journal your trades. So we're pretty much at the end of the book club session. So the key takeaways are: avoid resulting, judge decisions based off of the process quality, not the outcome. When a result doesn't validate or invalidate a strategy, express beliefs as probabilities. I'm 70% confident forces more careful analysis than I'm sure. Embrace uncertainty. Trading is poker, not chess. Acknowledge hidden information and the role of luck in outcomes, and update your beliefs. Being wrong is information. Quickly update estimates when new evidence emerges. Seek accuracy over ego. So these are a little few homework assignments I have for you guys. So this week, I want you guys to write confidence levels as percentages before each trade. So let's say you have an area where multiple confidences are at. I want you guys to, on your chart, write down the percentage of how well the trade is going to work out. And I want you guys to also start journaling your trades and assess your decision quality separate from the outcomes. Complete the reflection worksheet to identify patterns. And for long-term development, it's going to help you with decision making, probabilistic trading, and pretty much just going to help you as a whole on your journey to improve your mentality. If you guys want, feel free to find an accountability partner to review your thinking. But that pretty much concludes this week's session. Next week, it's going to be for chapters 4 to 6. Does anybody have any questions?
I just wanted to personally thank
Any
you,
closing
Moki.
statements?
Yeah, I just wanted to personally thank you for doing this. This is an excellent idea because most traders struggle with this. It's, the mentality aspect, and, it goes much deeper, like accepting loss, position sizing, talking in terms of probabilities, the whole frameworks. And a lot of people walk into this thinking, it's, hey, I can take a trade and make X amount. Well, that's cool, but you have to still look at the frameworks of, what is your portfolio? Let's say most of you guys in here probably listening are not working with $100,000 profile, but let's say 100,000. What are you risking per trade? 1%, 2%, up to 5%. And if you lose 5% of your portfolio in a day, is that going to make or break you? Is that going to put you on tilt? No. But if you're trying to emulate somebody else's trade, someone says, hey, I make $5,000 a day. Well, on a $100,000 portfolio, it's nothing, right? I mean, it's nice, but it's nothing. So, if you're trading with 5,000 or 10,000, if you're trying to make 5,000, well, obviously you're gonna blow up your account at some point in time because you're trying to match somebody else's trade, gain for gain. And that's never, you don't hear us talk about that, in RCG, like, hey, I made X amount of dollars per day. That's very unprofessional and not cohesive. You know, we try to show the setups, the frameworks, and so you can make decision making processes to manage those trades for yourself and not be induced.
Yeah, I fully agree. Um,
You mind if I add to that, Milk?
Go ahead. Absolutely.
Can you, yeah. Think of it this way, and I'll use Russell as an example. Russell gives off very generously. He explains every day the same thing over and over again. But you're taking a very small bet, right? Let's just say 30 cents, which is $30, right? And then he's showing you how to multiply it, right? Whether you trade one contract or 100 contracts, it doesn't matter. You first have to get it right over and over and over and over again, that one thing. Don't worry about what the next person makes. Multiplying how much you make once you have a solid foundation. And that's what Milk's stressing on. Get that solid foundation. Once you have the solid foundation, and if you can hit a one contract win 100 times, well, guess what? When you look back, you'll take that $200-300 account and it'll be a substantial amount. And then you could size on with house money, right? So when I have young traders come to me and go, oh, I got $300, I'm going to go all in. No, that's idiotic. Take it and put it like bullets, okay? Or in of this book, multiple bets. Because what are we working? We work in probabilities. Sooner or later, it just doesn't fall our way. Not because our plan wasn't right, not because our execution wasn't right. It just is probabilities, right? That's just the game of math, right? So if you can take $300 and take it into 10 bets, and you're working at an 80% probability chance, you should come out ahead on the wins mathematically, right? As long as you're disciplined, right? It's a lot better than trying to chase a pipe dream. Maybe you get lucky, maybe you don't. Be consistent, start small. Don't worry about looking at the next person's account. Look at how consistent can you be? How disciplined can you be? You control your emotions. And if you could do it with one contract, then you can say, okay, define your growth plan. There are young kids that I'll take and I'll say, okay, if you've got 300, you've got 10 bullets. Okay, grow that 300 to 600. Okay, and sometimes they'll be like, oh, I did it in one day because they followed Russell. They got a really good play. I said, okay, throw it away. Start with 300 again. Put that on the side and show me again and again. And after a while, your confidence will get there and you'll have a little pulling themselves out of a position. You don't know the circumstances. You will mentally screw yourself up. I promise you. The last thing you ever want to do is ask somebody how much they make. What you want to do is say, how consistent are you? Are you able to do this every day? What makes you consistent? Don't tell me how much you make. Tell me how you're able to repeat it day after day. That's who you should be copying. Making more money in what we do is just simply multiplying the number. That's all it is. If you can make in futures 5 points on one contract, it's $250, right? If you trade 10 contracts and you do the same exact thing, it's $2,500, right? And that is a lot of money when you multiply it by 250 days. Okay. So focus on not how much anybody else makes, not even how much you made on that contract, but are you consistent? Consistent in reproducing those results. You might not always be successful, but is the formula, the procedure, the motions, are they consistent? Yeah, I'll leave it at that. I hope that helps.
Appreciate you, VP. But yeah, I think that concludes today's session. Does anybody have any final closing comments? I also have a worksheet. there's kind of a few errors on it, so I think I'll send it out midweek if anybody's interested in filling it out. It's just so you as yourself could reflect personally on your decision making. But there's like 2 more questions I want to add, then I'll send it out. If anybody's interested, I'll ping everybody and post it in chat. But any last questions? Closing comments? All right, guys.
Moki, when is the
The
next
next one,
one?
I think it's going to be the same day, same time next week.
Okay, so next
Yeah.
Thursday night. Sounds good. Thank you. Thank you so much.
Thank you guys for being here.
Thank you everybody for coming too.
All right, guys. Thank you so much. Appreciate everybody being here. See you guys next Thursday. Hope you guys enjoyed it.
Good night.